going to be it's discussing market structure and just basically ingraining it in your mind. If you're a smart money trader, supply and demand trader, or a trader that just trades market structure and you just want to get better at it, this video is for you. So the first step I'm going to do is go right here, and I'm going to just explain some really simple concepts before I begin the whole tutorial. So the first thing I want to explain to you guys is the only way and the reason I find most of my trade setups is because of the trend and because of market structure. If I don't do my market structure, I can't be revealed to me potential trade setups. And the reason is because market structure shows to me specifically where on the price scale I should be looking at to buy or sell. If I'm buying and I'm trading with market structure, I'm buying low, and if I'm selling high. When I'm buying, I'm always entering off the correction, because if you know me and you know how I talk, and you know and you watch my channel and you understand smart money, the news a lot of the times is what actually moves the market because of economic policies, policy shifts, things like that. Smart money, the smart money refers is a nickname for the whales in the market. So the people that have the most money and make the most say and move the market the most pips movement, whether you're trading futures or Forex. And smart money refers to basically the banks, the institutions, the hedge funds, and basically the people that have the most capital, like I said, the whales. And these banks and institutions, they actually will be active in the market during the news events, and they will also be active in the market during trading sessions. So if you know and understand trading sessions and understand the London session and New York session, those are the two most volatile sessions in the whole world. And most of the currencies and most of the futures, they move during the New York session and the London session, because those are the most volatile and have the most activity. Just like how when you get online and when there's a lot of activity online when you get on, let's say, the Xbox or PS4, when there's a lot of players online, but if there's not, there's no activity. So in the market, we need players to make money, right? And if there's no players, then there's no activity. So smart money, I use the Forex economic calendar as an indicator, and one of my only indicators to let me know potential opportunities for trade setups that I can take. And this happens every single week. And if you notice, my screen only shows you the orange and red folders because I only want medium to high volatile events to pay attention to, because those events are actually going to be the ones that move and make the market and move the market's price. So, when we're talking market structure, I typically like to look for, in a bearish trend, two highs, two lower lows, two lower highs. So two lows, two highs. So we have two lows, our current low, which is there, and our previous low, and we have two highs, our current high and our previous high, which was right here. And so that right here would be a bearish trend for me. And once we establish we're in a bearish trend, okay, if we're selling in a bearish trend, where am I going to sell within market structure? So that answer would be your current range. So your current range is something that you're going to be able to identify once you establish your structure. So our current high is here and our current low is here because price is right here in this situation, right? And so let's say price is at this exact point where the bottom arrow is live. If I'm wanting to sell and I'm wanting to make money selling, I actually need to be patient and wait for price to go up before going back down. Because if you know the Forex market doesn't just go straight down. It goes up, or down, up, down. And so it's about getting in on those corrections. And so right here, the market, yes, it can keep going down, but it doesn't matter because, like I said before, that rule applies. The market will always go and recorrect itself. And so right now, the market's going to come back up, right? And this is what I wait for. I would need the market to come back up like it's doing right now, like I'm drawing, into at least the shaded area. Okay? And that starts at the mid-range to the top part of the range. And the reason there is because that's where price tends to reverse from and retrace from. It drops and then it corrects at least 50%, and then drops and then corrects, drops, corrects, drops, retraces. And the same thing going up. It goes like up here. It goes up, it corrects itself, and then it goes up, corrects itself, 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 down, corrects itself, down, corrects itself, down, corrects itself, down, corrects itself. And if you notice, if I just take everything on the screen and we actually erase it, that's actually all the market does, and that's how trends change. So it will go up, correction, up, correction, up, correction, and then from that point on, you'll see a trend change. And this is known a lot of times if you trade smart money, if you trade ICT, fair value gaps, things like that. This is known as a break of structure or a change of character. And so the market's character has changed because the character was the trend going up in the bullish trend. Now the character has changed because it's reversing and transitioning into a bearish trend. And so this will be a change of character or a break of structure. A break of structure is what I trade with. I don't use change of character. A break of structure is the same thing as change character. It's basically a disruption of a previous trend or an ongoing trend. And yeah, a disruption of a trend. Of the trend that was going. And a COS, a lot of people don't know this, but a COS is a continuation of structure. So if the market instead of went down, it kept going up instead of going down like it did here, then that would be a if it kept going up, that would be a continuation of structure because it's continuing to take out more highs to continue the bullish trend, because a bullish trend is up, down, and it's continuing making new highs, new ups. And so that's a continuation. It's continuing. And breaking is disrupting. And so I call this a breaker structure. And so right here, when we typically have breaker structures and the trends change, you're going to see two things. You may see on the volume chart, if it's going down, and let's say the trend is disrupting downward, you'll see gray volume. You'll see bearish volume. But if the trend is going the opposite direction, if the trend is going downward, you'll see gray volume. You'll see a huge spike of demand or supply, as well as you'll see a fair value gap maybe at the top of this range here, or a supply zone here, maybe an order block, right? And then you can actually potentially look for your setup once this breaks. So that's it. So once this trend is disrupted here, so like we said, we were in a bullish trend and we had price come and break one of the structures, causing a BOS, breakup structure. And once we have that break of structure, we have a new low here, and that new low would be right here, where I'm drawing that black line, and our high, our current high would be here, because that's the current high that we dropped from. We did not break this high, so that's our high. And if we're selling and price is at the low currently, we want to be patient and wait for price to retrace by doing this. So if the blue was here, right, we would want to be patient by price retracing and making its way back up to the top of the range, at least 50%. And once it's over that 50% line, then we can look for, like, say, a fair value gap, supply zone to enter off of, and then we can sell and blah, blah, blah. And so to be able to time when structures are going to change and when trends are going to change is the news. So yeah, the news basically tells you when trends are going to change, and also when trends are going to change or when trends are going to be creating new trends. And so there's news because news adds movement. So that's why, because the trends can't change or continue without movement. And so hence the news is the disruptor and cause of all trends. Because yeah, it's that simple. Because volatility is news. Well, my news, if you're trading the right news. If every week there's volatile news on any economic calendar, therefore markets are trending and moving and disrupting every week. So that's a week's worth of events that you can actually be trading. And you don't necessarily have to actually understand every single aspect of these events when you're trading them. You can simply just understand and become aware of the fact that the news is coming out today and it's high volatile, so that means that the market is going to move. And if the market's going to move, that means that the trend is there's going to be in the market that I'm in a trend that's going to be changing or a trend that's going to be continuing. And the cool thing about the news is it tells you literally what news is going to be moving. If you trade Forex is currency pairs. So if there's Euro news coming out today, I'm only going to be focusing on the European pair because that's telling me something, that's telling me the pair that's going to actually move. And so that presents me with an opportunity to identify a potential setup based off my trading strategy that should be smart money. So your smart money concepts and smart money trading strategy, supply and demand, ICT, that stuff should align with the news if you're trading it correctly. But yeah, guys, so the first step you should do is, I'll just give this to you guys. The first thing you should do when you're on the chart, if you guys trade smart money concepts, is look at the news that's coming out for today, and then after that, go on the charts and only look at the chart and only do analysis on pairs that are actually moving today. That's all you have to do. But yeah, guys, that's it. I wanted to make this video quick. I know it was really simple. Go watch it again if you didn't get anything. And yeah, guys, peace.